Thank you. Mr. Green for 5 minutes.
Thank you, Madam Chair. Please permit me to extend to Mr. Cordray my best wishes and let him know that I'm looking forward to a future meeting with him. Madam Chair, I'd like to, if I may, call to our attention an article in the New York Times. It is styled U.S. Consumer Watchdog to issue mortgage rules, and this article calls to our attention the following. Mortgage bankers generally applaud the new regulations, saying they clear up uncertainty that has hung over the home lending business since the financial crisis. It goes on to say these rules offer protection for consumers and a clear, safe environment for banks to do business. I understand that you have not created a perfect rule, but I also understand that we cannot allow the perfect to become an enemy of the good, something we often say here. So I'm going to segue now to something else that I call to your attention, because I am concerned about service members, and I'm concerned that some of them are still falling victims to scams. Too many. Someone would say, how many is too many? One is too many. And here are some of the things that cause me a good deal of consternation. I understand that the post-dated check scam still looms large. Car titles are being utilized to as a part of scams. You have businesses located just outside of military bases because they can't engage in on-base solicitation. We still have retirement benefits that may be a part of scams. They're being reassigned. Some of these scams originate in foreign countries. So could you just tell me quickly, are we looking at the scams that are being perpetrated upon our military personnel?
Obviously, our Office of Service Member Affairs is taking the lead for the agency in working on all these issues. They coordinate very closely with other parts of the federal government and are trying to bring greater transparency and awareness to all sorts of issues, including scams. I believe that they have been aware and gathering information about all of these issues, and we'd be happy to relay your question and provide more specifics. I don't think either of us can speak to the details of what they have learned.
Thank you. I think that's a fair answer, because I know what you came prepared to discuss today, and I just could not pass up the opportunity to speak up for service people.
It's something we take very seriously. We appreciate it.
Thank you very much. Now let's move quickly to another topic that we brought up, and this is community banks versus small banks. I appreciate greatly the question that the ranking member posed, and I thought you gave an answer that was acceptable, but could you kindly give me a quick indication as to whether or not you are making a distinction between a community bank and a small bank, and if so, what is that distinction?
We've looked at the impact on small creditors throughout the Dodd-Frank Act mortgage rulemakings, and in a number of places we have made accommodations or changes in the way the rules apply to smaller institutions. But we've done that in a context-specific setting. So we're not applying a single definition in all circumstances. Instead, we're looking at the particular activities at issue. So for instance, in the qualified mortgage and escrow rulemakings, we looked at a definition of small creditor that was focused on what types of creditors might have difficulty in escrowing and providing adjustable rate mortgages as compared to balloon mortgages. So we set one threshold there for those provisions, and we are proposing to continue that threshold with regard to the new category of qualified mortgage. In the
if I may intercede just quickly, so are you focusing more on the smallness or a small institution as opposed to a term community bank?
We were looking at a number of factors when we set those thresholds. What we set as a threshold was $2 billion in assets, and that the institution, along with its affiliates, was originating no more than 500 first lien mortgages a year. We were doing that because we were looking for institutions that are using relationship-based lending that are accountable to a specific community. So not only are they holding these loans in portfolio but because of the nature of their lending practice, they have very strong incentives and very strong practices to protect consumers. In the servicing context, we also looked at and exempted small servicers from certain parts of those rules. But
Let
we
me
looked at a
intercede quickly
different
to ask, because
definition
I have
there
3 seconds.
based on
Quickly, I must ask, when will this new rule be available for us to visit with you about?
We are working to implement it as quickly as we can. We'll issue it shortly, and we want to get it out. We know it's extremely important as people are working towards implementation.
It is, and I thank you very much. I yield back, Madam Chair.
Thank you.